While SCHD is definitely one of my favorite dividend ETFs for dividend investors looking for a great dividend yield and even amazing returns in either their 3-fund portfolio or as a set it and forget it standalone dividend ETF strategy. Now I found a way better dividend investing strategy of combining that of SCHD and DGRO, which are two of the best dividend ETFs in the game right now that will not only provide a legit bulletproof dividend ETF strategy, but also provide a super high dividend yield for that sweet passive income and super high and massive returns going on in the stock market lately. Now when you guys combine both SCHD and DGRO, you will capture the big boom in technology stocks, more particularly in artificial intelligence and AI, so you guys don't miss out on compounding your wealth way faster, since SCHD really hasn't been keeping up with the S&P 500 over the past year. I'm also going to be explaining why SCHD hasn't been keeping up with the S&P 500 or Vanguard's VOO. Now in this video, I'm going to be going over exactly why combining SCHD and DGRO is way better than having only SCHD. For the futures, you can have not only make a ton of money in the long run, but you'll still have massive dividend payments because this combination of SCHD and DGRO's dividend yield will give you around 3% dividends annually, and which is going to be over 2 times the amount of dividends you'll receive from something like Vanguard's S&P 500 ETF VOO. So if we had like $1 million in this portfolio, we are earning around $30,000 a year in passive income to pay off expenses now and even in retirement. And not only that, but this combination will also keep up with the S&P 500's returns and be less volatile than the S&P 500 for the ultimate bulletproof dividend investing strategy for beginners and even experienced investors. So stick around to the end of the video to see the results of this combination dividend portfolio. Now for a quick history lesson, in 2023, SCHD significantly underperformed both its peers in the dividend ETF world, but also the overall market, causing a huge concern to dividend investors since SCHD historically performed well in just about every economic environment. Now if we take a look at SCHD's top sector, we see that at the top it's going to be industrials, followed by the financial sector, healthcare, and technology. Now if we take a look at how the industrial sector performed leading up to 2023, it was pretty much in line with the S&P 500, but after 2023, this gap widened massively, leaving SCHD investors behind the pack, but not completely, since SCHD has one of the highest dividend yields I've seen personally for a dividend growth ETF of around 3.5%, which is absolutely insane. And you still got some returns, but not quite what SCHD investors were looking for, given its past historical performance of over like 13% annually. And you already, have a trade-off of opportunity cost of investing in other great dividend ETFs or index funds. If you take a look at SCHD's top holdings, you see Broadcom, a semiconductor stock that is up massively over the past year, yet SCHD still underperforms the market and its peers. And that's because you need to add a more technology-focused dividend growth ETF like DGRO that has the technology sector as its highest holding, so you can keep up with the market movements in tech stocks. So you get the best of both worlds of SCHD, which has a high dividend yield and more of a defensive stock strategy, and sectors that do well when tech stocks aren't absolutely skyrocketing to the moon. So you take advantage of value stock performance with the stocks comprised inside of SCHD versus DGRO's tech-heavy dividend growth stocks. Now, adding DGRO to an already amazing established ETF like SCHD is the future of dividend growth investing, as DGRO's high sector technology, which is comprised of blue chip dividend stocks with more room to grow their dividend at a rapid pace than the stocks inside of SCHD. DGRO also has high annual returns like over 12.88% over the past 5 years, and beating SCHD since 2023 from its top holdings mirroring the S&P 500 like VOO and the Nasdaq 100 like the QQQ of Apple and Microsoft as the top holdings. With Apple and Microsoft and other great tech names, it allows DGRO to achieve super high annual returns since these tech stocks have been skyrocketing over the past decade, but they are still growing their dividend at a rapid pace to investors. In simple terms, if a stock is growing its dividend at a rapid pace, most likely the share price will go up because the businesses are going to be generating more profits every single year, which means more gains for you in your pocket from capital gains and dividend income. Now comparing DGRO to the overall market, it has been able to move better than SCHD and crush it as of lately in other similar ETFs because of the boom in tech stocks. And although I don't have a crystal ball, I could see tech stocks in the technology sector increasing its returns a lot more into the future because of this new wave in artificial intelligence and AI, so you can take advantage of it by combining both SCHD and DGRO for the highest returns possible. Now, some of you guys might be thinking, well, why don't I just go all in 100% to DGRO and not buy SCHD because it's performing way better than SCHD, that of DGRO, right now and might do it into the future, into the next decade. Now, the reason why I don't like that mindset is because yes, SCHD might have had a really bad year in 2022, but who knows, maybe industrials and the boring yet good business models of the stocks inside of SCHD will outperform that of the tech stocks inside of DGRO for a year or maybe even 2 years or maybe even way more than that. And SCHD has more defensive stocks with way less tech exposure, and it will be way less volatile, evident by SCHD's worst year of negative 5.56% and DGRO's worst year of negative 7.9% over the past decade, and you are legit collecting a 3.5% dividend annually from SCHD, which is like 1,000,000 times higher than a normal bank checking account. Where SCHD can take the reins when the stock market favors value stocks and when the stock market favors more tech stocks, DGRO will carry the team. And DGRO also has an amazing dividend yield of around 2.3%, and if anything, by combining both SCHD and DGRO, you are more diversified than having only SCHD, so you are more diversified and safe. And taking a look at the past decade of returns of investing $100,000 into two portfolios of 100% to SCHD and the other of 50% to SCHD and 50% to DGRO, the difference isn't too noticeable in returns, but the 50-50 combination wins by achieving a higher annual return of over 11% annually and maybe a little bit more money in your pocket to splurge on, like something like a nice watch or 10,000 chicken McNuggets from McDonald's. But the real difference in the power of this portfolio really occurred this past year and might even occur into the next decade, but honestly, who knows? I don't have a crystal ball. I do in the back. Now, if we invested $500,000 since 2023, the gap widens between these two portfolios as the 50-50 combination wins by more of a lead by achieving over a 9% return annually over the past year compared to the lower return by having only SCHD, so you can have more wealth for the future. And we don't have enough data to predict the future, but the best and worst year so far over the past year of this combination portfolio is better over the past year than having only SCHD. Now, combining both DGRO and SCHD will be more correlated with the stock market, as the stock market or S&P 500 has a market correlation percentage of 1%. So we want to see this portfolio get to 1% as closely as possible so we can track the returns of the overall market and S&P 500. And as you can see on your screen, by combining both these ETFs, we will achieve a 0.92% market correlation percentage versus having only SCHD will achieve something like a 0.88% market correlation. So this can be way beneficial for your stock market portfolio in the future by combining these ETFs. Check out Seeking Alpha Premium, as their link is down below in the description, as they have experienced analysts and a quant rating that determines when is the best time to buy every day of the specific growth ETF of your choice to achieve the best return. Now that about wraps it up for this video, guys, on combining both SCHD and DGRO for the ultimate and bulletproof dividend ETF portfolio for investors, whether you're a beginner or you're an expert in the stock market. Now, if you guys like this video, please give it a like because it's cute puppy did, and comment down below if you have SCHD or DGRO in your stock portfolio, what percentages you have allocated to it, or how many shares you have in either SCHD, DGRO, or even both. Now, I love you guys so much. Have a great rest of your day and take it easy. Peace.